Market briefing. It is Monday, June 8th, 2026. Thomas, how we doing?
Good. Feeling good, feeling strong.
Let's go.
Big Friday. Lots happened on Friday, and looks like more's happening today.
More happening today. Been out at a meeting with somebody on the home repair front.
He's got an ongoing beef with an air conditioning guy. Prayers up for that guy.
Yeah, Ben is not someone you want on the on the bad side of a service arrangement.
I've listened to some unbelievable battles over the phone with Comcast, insurance adjusters, you name it. Ben goes hard in the paint, and it escalates quickly.
It gets very spicy very quickly.
It's like hello, how are you? And then it's like, I'm at a 10 now. It's go time.
Yeah.
So
they're like, oh, we hope you're doing well, Ben. He's like, well, you're not going to be doing well.
Yeah.
Let's go.
And if you're this HVAC guy, I mean, Ben, by all accounts, super nice guy, but physically imposing if he would be in an agitated state.
Yeah.
The man is very tall and in elite shape. So
good luck out there, folks. But who knows? Maybe it'll go well. I'm sure it will. So Ben sent us some notes. He's also actively teamsing us new updates. But we did have some volatility in the Middle East last week. Over the weekend, Israel and Iran trading strikes. But now maybe things cooling.
Yeah, it seems the most recent reports within the last few minutes are saying the IRGC is now saying that they're going to cease hostilities with Israel. Though there's also some tweets saying that perhaps some missiles just landed in southern Lebanon. So it really is up to Israel, it seems like, at this point, if they want to get their act together. It's not going great. So we'll see how it goes.
Yeah. President Trump out this morning with the truth saying Israel and Iran must immediately stop, and then in quotations, shooting President Donald J. Trump. So stop shooting. We'll see. I mean, I just continue to think this thing's going to keep grinding. I don't feel like we're actually getting closer to a resolution. Thomas, you hadn't been on the call in a little while. Do you feel a feel on this thing?
I got bad feels. I think this is I think that since I've started working here, which hasn't been a long period of time, but also not a super short period of time, we are exactly where we are 2 months ago.
I mean, relative
same talking points.
Relative to your own life, it's actually a really long time,
basically,
in terms of like percentages of life
much
lived.
Larger percentage of your life than mine.
It's true. We've worked here about roughly the same amount of time relative to our own lives.
Yeah. When you put it that way,
it's pretty wild, but not way off.
Yeah. So I don't know. I mean, I know that Trump was saying, hey, we'll get a deal on Monday or Tuesday or Wednesday. I wouldn't hold your breath.
I just think we have zero leverage at this point if we're going to keep going about the same talking points. I mean, they can just hold down the fort in the strait for the most part. And if none of their external goals are met with Lebanon or unfreezing assets, they're not going to budge.
Yep. That seems to be step one. That's especially the asset piece. Like they just refuse to come to the table without that. And as you might imagine, oil going up.
Yeah, I mean, up to $93.
Yeah.
So it's not like...
Not where we were.
That's the wild thing, is that there's a lot of panic. Obviously, Friday was... I mean, it was a bloodbath. Everything was down 2% or more. A lot of the high-flying names, AMD, Intel, down, between 5 and 10%, depending on the name. Lots of blood in the streets. Bonds sold off as well. But relative to where we are, I mean, we had, like an 8 straight week increase in the S&P 500. I mean, it's a little bit of a breather. I think it's a lot more to do with everybody taking gains. And it's suddenly, I mean, we've talked about it a bunch. There's suddenly a whole new crop of opportunities that are about to hit the market. I mean, Friday is go time for SpaceX. Where's all this money going to go? Where's the capital going to flow? If you're already up, call it 80% on some of these things in a month, why not take some gains? And if everybody does it all at once and you take a 7% step back, you're still massively up for a very short period of time. And, pigs get fat, hogs get slaughtered, as they say.
That is what they say. Yeah.
Just take some gains and, get a little weird with it heading into the weekend. But I think that's more of the story than we're heading for a global meltdown, at least at the moment.
Yeah. Tom, there's Bloomberg speculating that bond traders think we're going to get a surge in CPI. You aligned with this?
I mean, I don't disagree. I just think that the numbers are wrong. And we've talked about it again and again and again. The biggest driver is housing. They refuse to accurately represent that number. And so there's nothing to offset the increase in oil prices. But I think that we've reached the high water mark. I think that expectations for inflation are as high as they've been since Liberation Day. And we saw how that turned out. We didn't end up with 9% inflation, or that we're going to be set off the biggest inflation bomb in history, which I think was an exact quote from the Wall Street Journal. And I think we're going to start to hit a wall. I think eventually they're going to have to identify the fact that the housing number is wrong. I think Warsh will be able to get in there and do that effectively, but the timeline on that is going to be tough for him. And so he can't immediately walk in and cut rates, but I think that the fuse is getting shorter and shorter and shorter on this. Inflation is going to the moon story, as it did last year towards the end of the year. And I think we're more likely to get a cut than not. And I think this is opportunistic. I mean, we've been harping on the long bond quite a bit, but as things have flattened out on the yield curve, we've been buying a lot of intermediate bonds. I mean, the 10-year continues to be elevated relative to where I think it should be, at the 2-year as well. I mean, we're just continuing to just feather in all over the board and lock some of these future gains in. I think it's an opportunity and not a risk to the degree that financial news media would tell you. And even if it is, the math is still in your favor. And so I think that that's something to be considered as well. So, something that Ben and I were texting about a little bit over the weekend, and he's got it here in the notes, is that that jobs report was confusing because why would there be a sudden surge in hiring in leisure and hospitality? Well, we're about to have the World Cup here, and that's going to create a lot of staffing, and it's going to be short term, and it's not going to be, sustained jobs. And I think that that's probably a combination of it being a highly seasonally adjusted number. We're heading into the summer. Leisure and hospitality jobs typically are up. Plus you're adding the World Cup. Plus you're adding, all these special events in D.C., the UFC fights, the 250th anniversary celebrations. And this could be a little more of an anomaly than a permanent trend, and that could be really overstating the jobs market yet again. So I think that, there's a strong possibility that there's a hurdle or a brick wall out there that nobody is really thinking about, and we're going 90 miles an hour in one direction. We might hit a speed bump, and inflation could just crash and burn very quickly, I think.
Yeah, the jobs data continues to confound me. Notably, I mean, we talked about this at length. I guess back in last fall when Trump was getting mad at the Bureau of Labor Statistics and making changes there. Now, although we remain equally skeptical, I would say, of the jobs data that's coming out, Trump's saying great report. And whenever there's a great report, the market goes down because they think you'll raise interest rates. What they do is when they raise interest rates, they try to kill success. And if inflation comes, you stamp it out. But success can kill inflation just like higher interest rates. Growth is the greatest thing you can have, he says.
I mean, I don't disagree. The more money people have in their pockets, the more demand there is for goods, and that means you've got to compete as a price setter in any industry. Mm-hmm. And the things that spiral out of control from an inflation standpoint are almost always the ones where there are price controls and or government intervention. And so, the better the business portion of the economy is doing, the more you offset the government portion. And so I think that, I don't think it's disagree, but I would disagree that the reports are, I mean, this is being the president 101. Yep. Joe Biden talked about how many millions of jobs he created, and then he lost the election, and then they went back and they were actually, the number was 0.
Yep.
So, yeah. I mean, the greatest jobs return in the history of the world. Wow, congratulations. It was preceded by the biggest preemptive job loss because of COVID. And then not only that, but all those jobs were either not real or went to illegal immigrants. So, like, oops, great job. But as the president, that's what you have to do. How
you hype up the good data.
Yeah, you talk about how many jobs you created. That's a big point. And
how would you view? I mean, obviously it's early, but how would you view Trump's relationship with Warsh? And do you think they're fairly lockstep, or do you think? What's your read? I guess here's the better way to put it, Tom. How long till he's mad at Kevin Warsh about something?
Not long. I think that Kevin Warsh has to go in and play by the rules of the institution that he's entering. And as much as I think he is aligned in the idea that interest rates need to come down and that inflation is overstated. He needs to work the system to prove that. I mean, it's kind of like being a new GM. You walk into a football team and you only get the one draft, and you can go into the free agent market and you can pick up players that more align with your system. But when you walk in, you have the team you have, and you've got to slowly morph that over time. And or even like recruiting classes in college football. You know, Kalen DeBoer started with a Nick Saban team, and I think that that's going to fall apart over time. You know, when people realize that Alabama is not what Alabama was, and the coach is much softer.
I spent some time over the weekend with some super users that are really going to hate that line of thinking, but I think you're right.
That's okay.
And so shout out to you guys. Thomas, a big part of the sell-off Friday was, and we alluded to this earlier in the week with Alphabet getting some shares out into the market, continued rumors and speculation about others, Meta, Amazon, Microsoft, looking to get some capital in quote-unquote creative ways. How viable do you see that line of thinking, and how speculative is it?
I was not a big fan of this FT article. I mean, they basically said that, oh, well, they could raise equity capital because Google did it. I mean, they had no substance behind any sort of banking relationship.
I didn't feel like they said anything other than the concern Ben expressed on the call last week.
Yeah, it was, well, Google raised capital, so, you know, these other big companies could also raise capital if they wanted to. Just for a little bit of context, I mean, I know that Meta hasn't hired any bankers for any sort of equity deal. Google has been in talks with Goldman Sachs for this equity deal for like 6 months. So this isn't like a, man, we're absolutely out of cash right now. We need to raise cash, emergency equity raise, so we can keep the company going. I mean, this was a long thought out plan. I think that the Google was a bit of an overreaction, and you saw this in Google stock too. It actually didn't sell off too much past the dilution amount of the stock, but I thought that it was a little bit of an overreaction because they need to have some flexibility for raising more debt going forward, and it's honestly a bit of a cash crunch, especially if your stock has run up a bunch. It's a bit of a cash crunch to take out another big debt obligation to continue to build out this cloud computing that is being seen for a lot of demand for their customers.
Yeah, so you would argue, hey, not all that shocking that they're doing this. It's been planned, and it's an efficient way.
Yeah, and I think they're getting returns. They're going to get returns on this equity raise because of their demand for cloud computing. And maybe just right now, at least for Google, it's like, do we want to be paying out cash, especially where rates are right now, on a debt payment if we can raise equity? And then it just on the other company, it's like, well, are these guys going to raise equity? We don't know. I would need to see more companies talk about this with some confidence before I join on the, man, everyone's going to start raising equity train.
Yeah.
I mean, when the first shoe drops, though, I think there's going to be a diminishing return for each successive company that does it. So there could be a little bit of a, whoever gets to the store counter first and gets their cash, it's going to be better for them. And so I think that's the panic they're worried about, is like if Google does it, suddenly everybody's going to hit it real quick. And then, you know, it's almost like bankruptcies when the first 3-4 companies, when you see a default spike, will go renegotiate, get through it, trade off their bonds for new bonds or equity for existing bondholders, and will survive. But the 10th company that does that goes bankrupt, and the 12th and the 15th, they all, you know, the cash register is there, but then once it starts happening in size, then there are companies left behind. So I think that's a legitimate fear, but right now it's just a fear. They're just writing their fears down on paper and tweeting them out to the world, which I think is irresponsible. If
we all cope in
different
different ways.
Yeah,
we all cope in different ways. We do it on a podcast.
Yeah. I'm not a big journaler, so this is my only outlet, I guess.
Jensen Wong, seeing the sell-off as a buying opportunity. We did see Korea's stock market hit the circuit breakers overnight, down 8.5%. He's trying to calm markets, saying we're at the beginning of it, and whatever happened to the stock market, you should be very happy because now you can buy at a discount. I mean, that's a borderline Trumpian comment. You should be very happy that now you can buy at a discount.
Jensen is always telling you to buy. So I mean, well, Korea's
market, thus far he has been right.
You got to listen to the guy too. I think he came out with a tweet this morning too that was, so SK Hynix is planning on doubling their entire capacity. They build memory chips, which is basically the reason Korea's entire stock market is basically 2 memory companies. So that's the reason they were down so much. But he's like, yeah, no, not enough. They got to build more.
Yeah.
Doubling capacity by 2030, double it up
That's
again.
Weak. That's weak. All right, we get Apple's keynote today. TK, we've talked about it on the pod, but would you be in on AirPods that had cameras?
I just don't know what I would ever use AirPods with cameras for. Maybe if I was a gym influencer or something and I wouldn't have to have that
see you out there
obnoxious-
following a route on Pokemon Go, throwing the camera on and capturing some footage.
I don't feel like influencing any gyms. You know?
I mean, I'm not. I think it would be like a vlogger, but I don't know what member of the general population would be.
There's going to be so many
rocking the
Karen
AirPod
videos.
cameras.
I mean, it'd be basically deputizing everyone to have body cams.
Yeah. I mean, you get some great protest and rally footage.
Oh, yeah.
Because I don't know, like, what do people use the Meta glasses for recording right now? Basically just video. Like,
you tell me,
videos
Thomas,
of
what do you
people.
think they film?
I don't use them, so.
I don't know. We'll have to ask. Petty's got some
Yeah.
in the office. There was somebody, we had this is going to shock the viewers maybe more than the listeners, but we had our 20th year high school reunion over the weekend.
I did. Mine was like 5 years ago.
Yeah, most would be thinking, this has to be Andrew's 5th or 6th anniversary from graduating high school, but no, it's been 20. And there was one guy with the Meta glasses, and I mean, he just uploaded the most random footage of like walking around saying hi to people on Facebook, and it's Chad, if you're listening, there is 0 chance Chad is listening to this. Why?
Yeah. That's worse
Just
than
why?
like your mother-in-law taking a bunch of unflattering pictures of you and posting them everywhere and tagging you.
Yeah,
That's the next thing is when the boomers get a hold of
Yeah.
eyeglasses video technology.
Lord knows they need them.
It's going to change everything. So we will hear from Apple today. We'll get small business optimism tomorrow, CPI, and then SpaceX, the big individual company story, I would say, for the week.
Ooh, Friday, big day.
Buckle up, and we'll get University of Michigan sentiment on Friday. I wish that came out at a different time because it comes out after the call.
Friday, yeah, midday.
And then by the time you get to Monday, you've kind of forgotten about it. But
Yeah,
Because it doesn't matter, but
yes. Yeah.
So,
Because it's not real.
yeah. All right. We'll wrap it up there. We will be back tomorrow. And you guys have a great day.